All right, good afternoon then, everyone, as we are at the end of another week of trading and a pretty busy week of trading as of that. We'll start with the calendar. We'll have a look at the calendar and we'll flick across to some charts now in a minute. You can see the RBA meeting minutes, not too much out of that. Really took a back seat when we take into consideration we had three of the four major central banks out over the course of this week. We had Canadian inflation slightly higher above consensus, a big tick up higher, nearly entirely due to the rise in oil prices, and that is a common theme on the headline prints. The core CPI prints are obviously a little bit different once you exclude energy costs, but the big bull run in oil, increasing run in oil over the last number of months has obviously propelled headline inflation higher across the globe. But the Fed we had on Wednesday, you can see the Fed, no interest rate hike from the Fed, but an upgrade to their dot plots. The expectations for interest rates continue on at one more hike through to year end, so markets have to be ready for another interest rate hike from the Fed. Now, if inflation remains sticky, that seems a foregone conclusion. If the economic data remains strong, you'd have to imagine that they will in fact follow through with that. They've been wrong in the past. They certainly have been wrong a number of times over the last few years. Will they be wrong again? Remains to be seen. But we did see some solid US dollar upside off the back of that, some solid stock index downside off the back of that as well. We are expecting 2 interest rate cuts next year. That is what they think. So you see the central bank do seemingly think that maybe the interest rate is a little bit high. I want to expect a economic downturn to come, which is expected globally as well. So the Fed, reluctant to push back on this being the end of the hiking cycle, suggesting to us that they are not quite done yet, and another interest rate hike is in the pipeline. The Bank of England did not hike interest rates. Right, a weak inflation print out of UK on Wednesday morning, 7 a.m. Consensus 7% was for that to tick up. Now that includes oil prices, that includes fuel costs, and happened to tick down in the UK. So pretty negative CPI print from the UK on Wednesday then leads us into the Bank of England. The Bank of England decided not to hike interest rates. Now if I turn on the medium impact figures and we'll have a quick flick down, you can see core CPI, the year-over-year figure in the UK, consensus 6.8 down to 6.2, a substantial drop in the core CPI print as well, and 0.3 of the month of August, not great, but significantly below consensus, up at 0.7. So across the board, negative, lower than anticipated. I wouldn't say it's quite too much of a negative, but lower than anticipated UK CPI on Wednesday, which then brought us into the Bank of England. Now you can see 4 out of the 9 members voted for a rate hike, and 5 out of the 9 members voted for it to be unchanged. Previous was 8 and 1, so a big decrease, a decrease of 4 and an increase of 4 in terms of the hike, and then unchanged. When the consensus was for 7-9 in favour of a hike, it's only 4 out of 9 in favour of a hike, which means we then did not get an interest rate hike from the Bank of England. So that's super dovish, suggesting that it may potentially be done. Barring any sort of an increase in inflation, if inflation continues to trend lower at that pace, or even half at a pace that it did on Wednesday, that is also likely to be the Bank of England finished in terms of interest rate hikes. And brings us on to today. Retail sales slightly below consensus. Services PMI, more focused on the services PMI rather than the manufacturing PMI. But both of them below 50. I'll be manufacturing slightly beating estimates. Still 44.2, significantly below 50. Services PMI below 50, misses consensus. Again, another reason why the Bank of England did not look at hiking interest rates over the course of yesterday's decision. So bearish to come for sterling. You would have to imagine a bit of negativity to come, especially when you look at euro. ECB's President Christine Lagarde, not fully pushing back on it, but seemingly suggesting that they are done. You have to imagine that both economies are done, especially when you look across to the European, the German over to the Eurozone. But the manufacturing PMI from Germany significantly below 50. Okay, slightly above consensus, but 39.8, dreadful number. 15 months on the spin below 50 for the manufacturing PMI out of Europe's largest economy. Eurozone as a total, or as a whole should I say, manufacturing PMI below 50, below estimates, and really negative numbers in terms of the PMIs over the course of today, over across Europe and also across into the UK. Negative economic data across the board so far today. No interest rate hike from the S&B. Consensus was for a slight hike. Actual was a 1.75, in line with the previous month. We've just had US PMIs come through, slightly above consensus, nearly at 50 in terms of the manufacturing services above 50, composite above 50. Not bad economic data. Maybe might spark some upside in the US dollar as we head into the close today. But you can see stocks down heavily. The S&P down heavily. The Dow Jones, the Nasdaq, the Russell down heavily. The DAX, the Euro stocks all down heavily. The FTSE still hanging out up above the highs. Seems to like the weak economic data from the UK, as that will likely not involve fresh interest rate hikes from the Bank of England. And the FTSE, when you look at kind of post-COVID and stuff, has not had the returns that other stock indexes have had. There's a bit more room to the upside off the back of no more hikes from the Bank of England. So the FTSE has held pretty firm. Stock indexes across the board, across the US, across Europe, heavily lower across today. You can see massive upside in the dollar across the Aussie, across the Kiwi, across the Euro, and across Sterling. Sterling continues its trend lower. You'd have to imagine with another interest rate hike on the cards from the Fed, Bank of England seemingly done, you'd have to imagine that trend continues lower. A bit of downside in the Swiss franc, upside in the US dollar, pushing dollar Swiss higher off the back of expectations for an interest rate hike not being met from the S&B yesterday. Dollar CAD continues its trend lower. Oil prices did continue their trend, turned higher to begin the week, had a significant pullback then on Tuesday, but we have had some comments from Russia that they're going to stop oil production. So you'd have to imagine oil pops its head above 92, possibly above the highs set back at 93 on Tuesday afternoon. So, Russia removing a lot of oil supply permanently, as they have suggested. I mean, it's going to be permanently long term, obviously not, but certainly for now, they are not wanting to pump barrels of oil into the economy. Reduce supply probably gets this trend going higher again into next week. Bond yields across the US, they liked what the Fed had to say on Wednesday, popped higher and then have continued higher over the rest of the week. A little bit of a pullback into the close today. But yields still higher, especially if they're going to look at hiking interest rates again. That trend should probably continue into next week. If those yields push higher, dollar pushes higher, dollar yen higher, up to a higher level to test the Bank of Japan's resolve. Bank of Japan not exactly telling us they are going to look at hiking, not looking at hiking interest rates or adjusting monetary policy just yet, although they will at some point. That probably makes sense for another leg higher in dollar yen, especially if those yields push higher, lend some support to the US dollar. Negative for the Japanese yen, long dollar yen, if those moves continue, is the trade to look for into next week. That, along with oil upside, would make sense into next week. Oil upside, dollar yen upside, cable downside seem reasonable trades into next week. But that's it from us. Another busy week of trading, decent levels of volatility across the week. We'll be back Monday for another week of trading, back for one of these videos this time again next week. Thank you.